I'm LaDonna Lockard, and this is Max Convos. I'm here today with my favorite guest, Brandon. It's good to have you back as always. How are you, my friend?
I'm doing really well. It's always a dream to be on here with you.
Oh, thank you. Thank you. So we've been on the road a ton. We've been chatting with different loan officers in different markets. What are you kind of seeing right now with the market as a whole?
That's a great question, LaDonna. I think we should touch on that for sure because I'm seeing a lot of what I would interpret as misinformation out there. And I think that's a natural reaction to a change in the market coming from where we've been in a high interest rate environment to potentially maybe a lower rate environment. There's a lot of excitement and desire to get people interested in doing loans again. So where are we at right now in the mortgage market? Well, we know because we heard Chairman Powell say so in the meeting at Jackson Hole that rates are probably going to be slashed. It's not a 100% given, and we don't know for sure if they're going to go 25 basis points or 50. But I think everyone would probably agree that we're going to see a cut in the Fed funds rate. Now, we saw on Friday, I don't know if you saw this, but I definitely did, that the PCE inflation numbers came out, and they were a little bit lower than anticipated. So I would call that, like a tame reading and not very influential in the market. I think the biggest challenge right now that most of us are going to face and most of our consumers are going to face in understanding mortgage market dynamics is we're hearing this chatter or this conversation about rates getting cut. Well, what does that really mean for mortgage rates? The reality of the situation is the bond markets have already baked in the Fed's cut to the Fed funds rate. And if you look back over the last year, I think rates peaked in, I want to say October of 2023 at right around 8%. We're already almost a full 2 percentage points lower than that peak. So rates have already in large part come down. So I don't anticipate that the Fed funds decrease is going to dramatically impact or influence mortgage rates. That's going to happen in about 2 weeks. I don't think it's going to do a lot in the market. And so we have what we have right now, and we have a lot of opportunity with the current rate environment.
Last week, I spoke with Megan Anderson, and she basically mirrored exactly what you're saying right now. So I'm as two of the most informed people out there, I would say you're spot on. What type of conversation would you be having right now with your consumers, given the amount of social media chatter that's out there? I know you've seen it because I've seen it all over the place of rates are going to come down, things are dropping, and people are trying to kind of stir up anything that they can to really keep a consumer on the hook for either a potential refinance or maybe even making a move. What is the type of conversation that you would be having with your consumer right now?
Well, you know me, LaDonna. You could probably answer this question for me. I think the type of conversation that I would be having is just one that's centered on education. And that requires that as loan officers that we educate ourselves so that we can educate our partners and our clients and so that everybody wins. Because I think education always wins because you can bring value through education, and education helps everybody make better decisions. So what I would encourage loan officers to be learning about and then educating their sphere about is about the opportunities that exist in the market right now. So something that I want loan officers to be thinking about is in our current environment, where we're at right now. Now, I'll be the first to tell you, I'm not doom and gloom. I hope interest rates come down. I hope they come down dramatically. Not too dramatically, of course, but dramatically enough to make affordability a little bit more of a reality for more homeowners and more potential homeowners in the United States. I think we're facing a challenge as loan officers, and most of the loan officers that I know and in the spaces that I've worked in are either on the retail side or on the broker side. There's something going on behind the scenes right now that I don't think a lot of us realize, and that's the mortgage servicers of the world. Now, we're not going to name any names, but there's some big ones out there like Mr. Cooper, right? Mr. Cooper's a big one. I said I wasn't going to name names, but here we go. Mr. Cooper, Loan Depot's another one. Rocket Mortgage holds a pretty healthy mortgage servicing portfolio. And what we're noticing is that recapture rates, and what that really means is the servicer's ability to retain the loan. So if a borrower pays off or refinances a loan, what is the servicer's ability to recapture their business? Recapture rates, as have been recently reported by these large servicers, are approaching 80%, in the 70 and 80% range. That's dramatically higher than we've seen historically. I mean, historically, you're typically somewhere in the 20% range. So what that really translates to is we have, as loan officers of on a retail operation or on the broker side, we have a challenge in this upcoming market where we might see some potential refinance opportunities, because our biggest competitor is going to be the servicer. And the servicer knows how to get directly to the consumer. They know how to stay in front of the consumer. They know how to remind the consumer who they are. They're sending them a monthly invoice every month, right? And the consumer's logging onto their website to make payments and interact with them. And you better believe that these servicers are spending money on technology to get in front of these borrowers on their CRMs. They're using AI. They're communicating better. They're leveraging credit monitoring to see where the consumers are at with their credit scores. So my message to loan officers today would be, find a way to be relevant to your consumer right now in this moment, even though you're advertising to your client that rates are going to come down and that there will be an opportunity. My challenge to you would be, how do you create that opportunity today? And I think there's actually a lot of opportunities in the current market that we're just not paying a lot of attention to.
I love that. Fantastic advice. I want to continue this, but obviously this is Max Convos at minimal time. We'll have you back. Let's you back, and I want to jump back into that. So, as always, thank you again for being here, with me every day, but thank you especially for being here today.
I'm always here.
I know. I appreciate it. For Max Convos, I'm LaDonna Lockard.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.